Hey Sarah, I was thinking about how far we've come with money. Back in the day, we used to trade goods directly like you'd trade a bag of rice for a pair of shoes. It's amazing how the idea of money developed from that.
Yeah, exactly. It started with bartering, which worked for a while. But as societies grew and trade expanded, people realized it wasn't always practical. That's when things like gold and silver coins came into the picture, right?
Right, those metals were valuable and didn't spoil, so they became an accepted medium of exchange. But it wasn't until governments started minting official coins that we saw the first real form of money as we know it. Coins made trade easier, but even then, carrying around heavy metal wasn't ideal for everyone.
True. And that's where paper money came in. It was lighter, easier to carry, and eventually became the standard. The Chinese were actually among the first to use paper money around the 7th century, and it spread from there. Fast forward a few hundred years, and you've got banks issuing banknotes that represent a claim to real gold or silver.
Yeah, and that led us to the gold standard. For a long time, money was directly linked to gold, meaning you could theoretically exchange your cash for gold at the bank. It kept the system stable because governments could only print as much money as they had gold reserves.
Exactly. But after World War II, things started to shift. Countries needed more flexibility with their money supply, especially the US, which eventually moved away from the gold standard in 1971 under Nixon. From then on, we entered the era of fiat currency, money that isn't backed by a physical commodity like gold but has value because the government says it does.
That's where we are today with our traditional monetary system. Governments control the supply of money, central banks regulate interest rates, and we all use these banknotes or digital bank accounts to buy things. But now, with the rise of cryptocurrencies, we're seeing a whole new system that's challenging the way we think about money.
Yes, cryptocurrencies have really disrupted the financial world. Bitcoin, which was created in 2009, is often referred to as the first decentralized cryptocurrency. It introduced the idea of a peer-to-peer network where people can send money to each other without needing a bank as a middleman. Instead of relying on central banks, it uses blockchain technology, which is a transparent and secure ledger system.
And that's been a game changer, hasn't it? The fact that people can now hold digital assets that aren't controlled by any government or central authority is revolutionary. The idea behind Bitcoin and other cryptocurrencies is to give people more control over their money and transactions. It's also about reducing fees since you don't have to go through traditional financial institutions.
Absolutely. And since Bitcoin's launch, we've seen thousands of new cryptocurrencies emerge, each with its own purpose or twist on the technology. Ethereum, for example, introduced smart contracts, self-executing contracts with the terms written directly into the code. It allows developers to build decentralized applications that run without needing a central authority.
Ethereum is huge in that sense, and then we have stable coins like Tether or USDC, which are pegged to traditional currencies like the US dollar. They're designed to have less volatility compared to Bitcoin, which can be quite unpredictable in terms of value.
That's an important point. Cryptocurrencies are still a relatively new technology, and their prices can swing drastically, which makes some people nervous about using them as actual money. But, more recently, we've seen trends like DeFi, decentralized finance, which lets people do things like lend, borrow, and earn interest without a bank, all through smart contracts.
And with that rise in DeFi and crypto adoption, we're also seeing more creative ways to engage people with the technology. Have you heard about airdrops, Sarah?
Oh yes. Airdrops have been a big deal in the crypto space. For those unfamiliar, an airdrop is essentially when a cryptocurrency project distributes free tokens to its users. It's usually done to raise awareness or reward early adopters. And the recent ones, like the Notcoin and HMSTR coin airdrops, really caught a lot of attention.
Definitely. Notcoin had people buzzing because it was distributed to active users in the crypto space, rewarding them for simply being part of the community. Airdrops like these help build momentum for a project because they get people invested in the ecosystem early on.
And HMSTR coin was interesting because it used a creative approach by engaging its community in a way that went viral on social media. Everyone was talking about it, and even people who weren't into crypto wanted to get involved. It was a clever way of using airdrops to bring more users into the fold.
Exactly, airdrops are a great way to incentivize people to learn more about a project or to reward them for being part of a community. And for many, it's their first introduction to crypto, so it's a learning experience in itself. But of course, with all the hype, it's important to do your research and be cautious, as there are also scams out there.
That's a great point, Jack. As exciting as the world of crypto can be, it's still new and unregulated in many places. Scams and hacks are a real risk, so people need to be careful where they put their money and make sure they understand the projects they're getting involved with.
Right. It's always a good idea to do your own research, check the credibility of the team behind the project, and make sure you're not rushing into anything just because it seems like a quick win. It's an exciting space, but like any investment, it comes with risks.
Absolutely. But for those who are curious, crypto does offer a lot of opportunities, not just as an investment, but as a way to rethink the future of money and finance. It's democratizing access to financial tools and services, especially for people who don't have access to traditional banking.
Yeah, it's amazing how crypto is opening doors for people in developing countries where banking infrastructure might not be reliable. With just a smartphone and an internet connection, anyone can participate in this new financial system. It's giving financial freedom to millions who were previously excluded.
And that's probably one of the most powerful aspects of cryptocurrency, the potential to bring financial inclusion to people around the world. It's still early days, and we'll see how governments and regulators adapt, but the possibilities are pretty exciting.
Definitely, and we've only scratched the surface. From NFTs to Web3, there are so many innovations happening in this space. But it's always good to remember that, like anything, it's about balance and being informed before diving in.
That's true. For anyone listening who's interested in getting started with crypto, it's worth taking the time to understand the basics first. Learn about blockchain technology, how wallets work, and the risks involved. Don't be afraid to start small and experiment, but make sure you know what you're doing.
Exactly, and there are plenty of resources out there, books, online courses, even podcasts like ours to help you learn about this new world of digital assets. It's an exciting journey, but one where knowledge is your best tool.
And speaking of journeys, I think that's where we'll wrap up today's conversation. We hope this chat has given you a clearer understanding of how money has evolved and where cryptocurrency might be taking us next. Whether you're new to crypto or just curious, there's always more to explore.
Thanks for joining us today. If you enjoyed this podcast, don't forget to hit that like button and subscribe to our channel for more informative conversations on crypto, finance, and learning English. We've got a lot more content coming your way.
And if you have any questions or topics you'd like us to cover, leave a comment below. We'd love to hear from you. Thanks again for tuning in, and we'll catch you in the next episode.